This is the Cameron Journal Podcast. It's a place where we talk about important things. It's a place where we bring a little slice of the news to you. It's a place where we do important things, have important conversations. It's also things that I like to talk about. My name is Cameron Cowan, and this is the Cameron Journal Podcast. Today on the Cameron Journal Podcast, I am so happy to be joined by Kawaoka. He is a real estate investor and former civil engineer who has created this whole thing called Simple Passive Cash Flow. And we're going to talk about real estate and how to create passive cash flow and all this type of thing, which I'm sure will all be very interesting. And it's going to be very educational, especially for those looking to get into real estate as such. So welcome, Lane, to the Cameron Journal Podcast. How are you?
Hey, good. Aloha, Cameron. Hello to everybody. Nice to finally meet you guys.
Yeah, absolutely. I am very interested to learn about you and your business and how you got into it all, because I do very, very small real estate investing on groundfloor.com because I'm a working artist, which means I have no money. So but I love the real estate market. I used to work for a landlord trade association. So I kind of learned the business, both buying, selling, rental, wholesaling, kind of at the very ground level. So I'm excited to hear your story. How did you get into real estate investing? What attracted you to it? And how did you create your success?
Yeah, so I, kind of grew up, my parents taught me to go to school, study hard. I became an engineer, I went to University of Washington nearby where you're at, and just started to go work for the man. And then, followed this, what I call this linear path, right? We're all kind of taught to go to school, study hard, put your money in a 401k, buy a house to live in. And I did. I bought a house up in Maple Leaf in North Seattle. And, here I was, this young 20-year-old kid. And because I was traveling all over for work, I just decided to rent it out. This is well before, Turo and all this type of stuff. But that's where I got this taste of cash flow because, my mortgage was $1,600 a month, but my rents were like $2,300 a month. And I realized like, wow, if I just, save up more money for down payments, I can just keep doing this more and more and more. And, that I didn't know anything about the 1% rent to value ratio or how to calculate expenses. I just knew that, several $100s was dropping in my bank account, and it was kind of good beer money at the time.
Well, yes. I mean, I think there's a lot of people that get started that way. So I'm not surprised about that. So what was the point you reached? How did you go from, hey, this is some nice extra money while I travel, to like building this huge portfolio with like mobile home parks and all this type of thing? Because the list you sent is expansive. So tell us a little bit about that journey. How did you go from, this is some nice extra money to like, here's my real estate empire? Mwahaha.
Yeah, I mean, that was back in 2009, 2010, 12, I was just saving up my money to go buy more apartments and in South Seattle. But then I realized that, Seattle, California, Hawaii, New York, Boston, these are all what we call primary markets. Sophisticated investors don't invest there for cash flow. It's if you want appreciation, sure. But, that's where I think I'm different from most investors where, most investors buy low, sell high. Makes a lot of sense, but, requires luck. Whereas what I was kind of looking for was cash flow, right? Rents higher than to pay the expenses. And then that allows me on a monthly basis to create cash flow. To my interim goal was to quit my engineering job that I didn't really like. So I I discovered that, these things called turnkey rentals, where you can buy a rental property that's been fixed up, new flooring, new appliances, new plumbing, electrical, out in these flyover states. So I bought 11 of these things out in Birmingham, Atlanta, and Indianapolis. And that's what I did for the next 5 years. Then I started to join different masterminds and get around other high net worth investors. And a lot of the message that they were saying was they were ditching their little rental properties behind and getting into value add apartment syndications. And then that was probably around 2015 and 16. And kind of the rest is history. Today we own over $1.2 billion of assets owned, and I think that's like 8,500 rental units, mostly in Phoenix, Houston, Dallas, and Huntsville, Alabama.
Oh, that's quite impressive. That's quite impressive. So, what would be your best piece of advice to somebody who's maybe trying to get started in this business, maybe thinking about, I won't sell my house, I'll buy another house and rent out the one I'm leaving. What would be your advice to them?
Yeah, I mean, I think I've kind of come full circle with this. Like as I started to, connect with high net worth families, I started to realize a lot of the tactics that they do is very counterintuitive, but they're very simple at the end of the day. Things like, using debt as your friend, investing in cash flowing assets just in case there's a recession, you still cash flow and hold on to the asset. And, like wealthy people don't really use retirement accounts because they don't pay taxes. That's why, and you don't pay taxes by owning real estate, right? By using the losses from the asset and maybe even doing a cost segregation to getting bonus depreciation. It's just a very different game that the wealthy play that anybody could employ. But unfortunately, most people are kind of stuck, following the Dave Ramsey, Susie Orman, or the traditional financial advice that our parents taught us.
Absolutely, absolutely. That yes, depreciation schedules, they make your tax returns hundreds of pages long, Lord knows, but they're great ways to really cut down on the tax bill. So that is one of the advantages of real estate. But that's interesting. So yeah, so like for the small landlord, a lot of when I worked for this landlord association, most of our members only owned like one or two properties, all this type of thing. What does it really take to go from like one or two properties to like 20? Like, what does that look like?
Yeah, I mean, a lot of this takes time, right? Like this is not a get rich quick scheme. I mean, there's a lot of people that teach these crazy systems and no money down. I mean, that's not what me or my clientele do. A lot of us have good paying jobs or good business entrepreneurs, and we make money so we can use that on, the 20% down payments on these assets. Nothing crazy. Um, Again, I bought my first rental in 2009. I got to 11 of them in 2015. I mean, it was kind of slow, right? And I was saving 50 to $100,000 out of my paycheck every single year to power buying more and more of these rental properties. And I think that's what a lot of people don't realize. I mean, when you're starting out, yeah, you got to be a little landlord. But once you become an accredited investor or, you make over, a couple $100,000 a year from your day job or business, or you have a net worth of, getting close to $1 million, it's definitely time to switch over to a more scalable type of investing, a more of an accredited investor mindset. And at that point, it's not really about running around hunting for deals. It's more about schmoozing and interacting with other purely passive accredited investors to find where are the deals to invest in.
No, that makes a lot of sense. I think that's an important aspect. One of the things I used to always teach in classes when I worked in this business was take a long-term view. This is something you need to be thinking about 10, 20 years, not, 5 is probably the shortest time span to think of. You got to think kind of over the long term, both. And I think that, I don't know if you agree with this, but I think even if you're thinking cash flow or appreciation, you have to take a long-term view on this sort of thing because it does take time, but it ends up being more valuable as time goes on.
Right. Like this isn't like a get rich quick scheme, but it is a get rich surely thing. And it just takes time. And this is why, I think a lot of kids these days who don't have very much money, I mean, they have to go after asymmetric risks, such as like investing in Luna or some altcoins. But real estate, it is one of the most like time-tested assets ever. I mean, it's a commodity. It it provides a service to people that really won't will never go away, and it's a commodity that's even in more demand. Especially, we focus in on workforce housing. Housing for regular people. None of the $2,000, $3,000 a month rentals. Most of our rental properties rent between $700 to $1,600 because our investment thesis is, well, in tough times, we want an asset that will get even more in demand as people from the A class type of apartments, or maybe they get foreclosed on in their houses and they have to go to more value B class apartments where we're at. But it's not a sexy way of investing, right? I mean, there's not, it's kind of like blue collar investing in a way.
Absolutely. And I think that's an interesting kind of way to put it, blue collar investing. But I mean, yes, the slow and steady does end up winning the race when it comes to investing. That's true across all sorts of investments, but that's particularly true in real estate. So now let's talk about housing and housing crisis has been in the news for a while. I've written about it. A lot of people have written about it, talked about it, all this type of thing. And landlords have kind of come under fire in the popular mind, I think, because rent seems to go up, it's outpacing wages, all this type of thing. What do you think about America's housing shortage, housing crisis, what people are going through? What's your perspective?
Well, I try not to follow politics or even have a viewpoint on that type of stuff because I quite frankly think that it's kind of a waste of time. I'm an investor and I kind of, I see what the trends are. And to me, the trend is pretty obvious. Population growth is going up, especially on your lower end, right? Immigration. And that's really what propels this country forward because there's always a source of cheaper labor out there. And that's why immigration is important for America. If not, we ship all the jobs off to Asia or other, cheaper sources of labor. So, but you just look at the population dynamics. I mean, go look, Google any major city or just America in general. The population is increasing and it's not the high end people, it's that lower middle class that's out there. And the middle class is getting shrunk and getting pushed down and down and down. So, that's why the idea is to go after these more, B class, maybe even C class type of apartments. But of course, stay away from like the slumlord type of stuff. I mean, yeah, that's just too much headaches and trouble there. Trust me, we've been there. But there's a nice little sweet spot, I think, for investors to kind of pick up this lower middle class type of clientele. But yeah, I mean, it's pretty obvious, right? People are having a pinch, and I mean, I think it's unfortunate. I don't think that most people should own their house, right? Most people are really bad at saving their money. They cannot afford a down payment. I don't think people should be able to buy houses with no money down. To me, if you're unable to save $50,000 for a down payment, and that's a down payment on like more of a modest house in, secondary and tertiary market. In California, you're talking about $250,000 down payment for a house out there. But if you're unable to demonstrate that, I think that you should be renting. Um, and I think that nowadays, like the way the lending is, I mean, they kind of fix a lot of the no income, no job, the ninja loans back in 2008. And we all saw where that went. So there's a lot of controls in place for people getting mortgages to buy houses. And I think that's good because it keeps things very stable. But I don't know, man. I mean, it's kind of disheartening, but it is what it is, right?
No, no, certainly. I think there is. I mean, I think there's I see this from two sides. So on the one hand, I think it's great that you are trying to provide workforce housing for people because people need places to live. I think that's fantastic. I think there's a lot of people who don't focus on that sweet spot of the market enough. So I think that's fantastic. But I also kind of, wonder when it comes to, having a nation of renters and having people like you and your clients kind of profiting off of people's um kind of need to have a place to live. There is I think it is somewhat fair to criticize that system.
Yeah, I think I definitely do see where that is. I do think that some people in our industry give us a bad name. I like to think that we've chosen an industry to go in and do business right, treat people with a respect, and from our tenants down to our employees. And when we go in and we buy an asset, we're putting in nicer flooring, new appliances, but we're also improving the community. We're kicking out the deadbeats, the drug dealers. We're putting in new playground equipment. We're changing out the grounds. I mean, we're creating a better community for the majority of the tenants. More of a utilitarianism kind of point of view. And that's kind of my standpoint. Like if it's better for most of the people living there, and we kicked out the deadbeats, the people, the unsavory characters, then I feel like we've done good in the world. And to me, like I think this what separates us from a lot of, so-called investors. There's a lot of investors out there or people with their 401ks that are just simply putting money into stuff and hoping the price goes up. Well, what we're doing is we're forced appreciating the asset. We're adding value. And somebody told me a long time ago that, wealth really comes to those who create value in the world. There are some people can say the same thing for like payday loans. Now, I think that is a little unethical business, but it definitely is providing a service of value for certain people. Whereas I feel like the service and the value that we create in the world is creating better communities for the tenants.
No, absolutely. And I think that's great, that actually, making improvements, doing things. If you want to come by my building, feel free to, anytime. And so that's no, I think that's fantastic. I think that's a good way to do it and also like create better communities and you get stable tenants, which means you get great cash flow. The neighbors are happy because the property is better. That's a win, that's a triple win in my mind.
Yeah,
Like,
we'll
what's not to
actually hire
love?
like consultants who come in and they're kind of like the rah-rah squad.
Yeah.
I don't know if like it's kind of like the Saturday Night Live, the Will Ferrell cheerleader couple. Like
Yeah,
they're
yeah,
super
yeah.
extroverts, and then we'll either if it's a smaller complex, they'll just rove around. But if it's a larger complex, they'll actually live in one of the apartments, or we'll give them cheaper rent. But they go around and they plan community events like Mother's Day barbecues, that type of stuff for the kids. And I think that's some people don't like uh, the apartment communities, but some people really do, right? I mean, it can be a big thing, especially, in America where like, you don't even know your neighbor, right? Most cases. And I
Right.
kind of going back to your earlier question, is nation of renters. Well, I mean, it depends what you're looking at, right? Like most people in the world are kind of living in societies where most people do rent or the government owns your housing for you, right? Like I think there
Looking at you,
is
China.
I mean, like I
Yeah.
think that we focus in on more of this garden style type of apartment, not like the slumlord, like New York apartment complexes that are like the projects, like the high rises. We
Yeah.
typically go after these one or two-story apartment complex where you have your little drive up and there's a little courtyard, more of that suburby feel than the high rise dungeons.
No, absolutely. And I think that's definitely, I mean, I think well, one, there's a nice demand for it, right? And two, it's a nice business. And if you do all those things that you talk about, you're going to end up with long-term tenants, which is better money for you. So like I
That's
said, everybody kind of wins.
Yeah, that's correct. But yeah, I don't whether it's a I mean, I think Bush I don't know what year that was, like 2000, 2005. Like that was the big push that they had back then was they thought that everybody should own a house. And that's why they created those lending programs where they just give whoever with a heart rate and a warm pulse a
Yeah.
loan. And we saw where that went. Now we're kind of going more towards, nobody can afford a house. And to me it's very disheartening, right? It definitely is the bipolarizing the population. The have-nots are getting poorer and the wealthy people are getting even more wealthy. And the pandemic accelerated this. I mean, just we see it. I mean, I run some Class A apartments and some Class C apartments and everything in between. And the Class C people, those are the workforce housing. Those are the frontline workers. They're the people at the grocery store, and they're also the restaurant workers or the hospitality workers that get laid off. Those are the guys who got, beat up by this pandemic, where podcast listeners out there, I mean, most of us are more of the affluent, the higher end. We're kind of the ones that are just kind of cushy and, huddled at home and ordered Uber Eats or whatever and worked our white collar professional jobs on the computers. And many of us were okay. And now a lot of our white collar jobs are going up in pay inflation, where the Class B and C tenants they got beat up a lot more on this particular recession that just happened. It's unfair. I mean, I again, like I don't try and play politics. I just try and educate people who are, willing to listen and say, look, this is what's happening. I don't care. I mean, I do care, but in my opinion, that's like I don't have impact in that. But at least let's put your own oxygen mask on before you start to get pickup signs and, you know, running for Congress or whatever. Figure out what's best for you and your family. And I tell people, well, that what that is getting educated on your finances, saving some money and buying real assets. So when inflation does go up to 10%, you don't you have assets that also float up with the pace of inflation. Whereas most people do not buy any assets. And therefore their what little wealth they have is being decayed 9-10% every year.
Yes. Now, when it comes to, I agree with all of that. I totally get where you're coming from.
You're making me
Um,
sad, Cameron, talking about this stuff. I mean, it is.
well, but also it leads into my next question because there's a lot of people, learned, educated people who think we're in a bit of a housing bubble. In fact, someone posted in my investors group for ground floor, we do renovation, fix, flip, new construction, primarily in the Southeast. And people were saying, "Oh, I'm keeping my money out because there's a housing bubble, and it's going to be harder to fix, flip, and sell or rent going forward." Where do you think we are in the economic cycle of housing? Are we bubbling? Are prices just going up because there's a shortage? What's your take on that?
I mean, I definitely do think that it kind of went up during the pandemic for obvious reasons, right? Because people were huddled at home, they couldn't spend their money in anything else, and
Right.
um, so maybe you could say that was a little bubble. But the wealthier I get, and this is what wealthy people do, they look at things on a longer time frame. They don't look at their month to month paychecks. They don't look at their quarter to quarter dividends. They don't look on 3 year, 5 year, is this a bubble or not? They look on the long term. And on the long term, sorry everybody, but housing ain't going to get any cheaper, right? The best time to buy something was yesterday, right? So I think that's a very common thing in like, a lot of like newbie investor groups. And I call them newbie investor groups because quite frankly, what's their net worth, right? Like I stopped listening to people with a lower net worth than myself for anything financial. And I would, I would urge people to start thinking that way because everybody has an opinion. Everybody thinks they're a traffic engineer because they drive a car or they're a dietitian because they eat food, right? Everybody has an opinion. But I
Right.
would say, well, follow the opinion of people who are higher net worth and kind of have done what you want to do. Because from what I see, like it's very common, right? Like people watch these YouTube clips and they just get freaked out and they don't look at the fundamentals. And the fundamentals are housing is a very scarce resource. They're not making any more of it or land, and their population is increasing. And that's why I invest in real estate and the taxes too. But it's a very simple dynamic.
Yes, no,
Um,
I mean, I didn't follow that person's advice. I this is my this is for me doing the fix and flip thing. If I have an opportunity to act as the bank, then I will. And this is my 30-year plan. So for me, I'm not concerned, with temporary difficulties. I'm willing to sit and wait. In fact, I just had a house, the poor this property. They were fixing it up. The house burnt down. We just finally got paid out from the insurance company. It took 2 years. Um, you have to be patient about this sort of thing. But I don't mind because when I look at my real estate, I'm looking at like, yeah, this is a 30-year thing that I'm just going to be doing this for a very, very long time,
yeah.
over many years, and doing more and more deals and all this type of thing. So I totally get that. And I think that's quite wise. Do you think in your business, if we started to build massive amounts of more housing, do you think that would help your business or hurt your business?
Yeah, I mean, that's whenever you do a SWOT analysis, strengths, weakness, opportunity, and threats. I mean, my investment thesis or where I put my money where my mouth is, put skin in the game. I mean, that is the threat is if the government just decides to build a whole bunch of, projects for the masses. But that ain't gonna happen. This ain't China. America's just not going to do that. And they've tried to do that and it doesn't work because then now you have these hugely blighted areas and crime and drug use goes rampant. What works, and this is kind of like a lot of the universities study this, is you have to pepper in your kind of your lower income amongst large neighborhoods of and have a vast economic type of stratosphere. Of course, a lot of people who are on the higher end, they bring up the whole not in my backyard argument. But, if you want a sound society, that's the way to do it. But I do not think that the government is going to get in the business of creating a whole bunch of government housing. What they do today, and one of the reasons why I got into multifamily apartments is because what the government does do, what a lot of people don't realize is they heavily subsidize a lot of the lending going out to folks like us in terms of non-recourse debt, great interest rates. They'll finance a lot of the rehab money. It's just like in a way, the government cannot do it themselves. So they have to find a way to incentivize the little honeybees like us to do what they intend to do.
So, with that in mind, have you ever built a project from the ground up, or are you ever planning on doing that?
We've done that a few times here. It's just a different business plan, right? I mean, we've most times what we'll do is we'll go into a stabilized asset. So something that's 90% occupied or more, it's definitely making money from the start. But the units are a little tired. They're looking like from the 1980s. So we change out the yellow appliances and turn them stainless steel or black or white and new flooring, new paint job. And we'll kind of bump up the rents incrementally from there. Very light rehab. But what we're finding is, the maximum amount of value add or margins are actually in the developments, ground up developments. The problem there is you're limited to land. Not
Right.
There isn't large 30 acres of plus land available to do that. So we kind of just, take what comes, right? We're always kind of looking at uh, a wide range of stuff, but still, I would say we're still shooting down the fairway, still under this. We're looking for something that caters toward the lower middle class, just in case of a recession. Um, Nothing too high, nothing too low, kind of in that sweet spot. It's a big sweet spot, in fact, though.
No, definitely, definitely. I see that for certain. So when it comes to working with you and all this type of thing, if someone wants to work with you on creating this type of business, how would they do that?
Yeah, I mean, like I said, if you're an accredited investor, I would say maybe jump on board on some of our projects. But, if you're starting out, and that's kind of one of my big personal missions is like, there's just so much bad financial advice out there, investing in your 401ks, retirement accounts, Roth IRAs, pay down your house, like these, I get it where the information comes from. It comes from people's parents and the coworkers at work who are there for 30, 40 years. Again, why would you want to take advice from somebody like that? And that's what we do at Simple Passive Cashflow, .com. And I teach people like what the wealthy do. So there's a lot of free education there on the podcast and the website. And if you're kind of starting out, just do what I did and just buy a little rental property. We have a free e-course for that. Maybe check out the simplepassivecashflow.com/turnkey is kind of the information page in that. But if you're looking for more bigger deals, go to simplepassivecashflow.com/syndication.
No, no, that's perfect. That was your opportunity to plug and get people involved. My listeners tend to be a bit wealthier, so they're your customers. So I was giving you a chance to grab a
Yeah.
few more
Well,
people.
you never know who you get out there, right? Like, I mean, a lot of people will email us or, get on a call with me and there's some kid and, I like to help them out, right? But
Yeah.
it's unfortunate because a lot of these kids, they just want to do these bigger deals and it's like, hey man, like you got to get your net worth, like you got to get unbroke first, right? You got to get to $100,000 net worth. You got to get to $500,000 net worth. But most of those guys, like they're not, well, it's not hard, but it's very simple, right? That's why I made the website simplepassivecashflow.com. It's very simple. Like you just have to like save up your money. You can't be an idiot with your money and spend more than you make. Unfortunately, 99% of people in this country are like that. And that's kind of goes down to like why I don't think everybody should own houses. Um, but for those of people who are good with their money and, save 30, 50, $100,000 a year plus from their paychecks, there's a different way of doing this. And then there's a different operating system to follow that doesn't follow the Susie Orman, Dave Ramsey, pay off your debt um, type of type of path. There's a path that the wealthy do where they use good debt to go into assets to create cash flow, and that's how they power their lifestyles.
Yeah, yeah. What do you think about these large investment companies that are buying up, millions of single family houses and renting them out? I think that's nuts because property management can only do so much. Who's really in charge? That seems like a recipe for disaster. What do you think about that?
Yeah, I mean they did that back in 2010 to 2012.
And they're back
But
at it. They're buying
yeah,
whole
they're back at it.
neighborhoods now.
But
That like
the
whole
lesson
developments, just one company. It's crazy.
Yeah, I mean the lesson learned back then was like, what's hard is like these single family homes are scattered all around. You have no synergies. Where that's why I do apartments because everything is under one house. We have a dedicated leasing team. We have a team of handyman. We can get things done in house under salary for our guys, and a lot of times they can knock out like a HVAC repair or a plumbing repair before their first smoke break of the day. Where with these single family homes, like sure, these larger companies can build the same teams and logistically center them, but they're spending most of the time driving around. You basically have delivery men on your workforce and just not as efficient. So, I mean, but like, I think that's where
No, no,
like,
I'm glad you said that because that was my intuition coming from a property management background. I'm kind of like, how do you run that? Like how it to me it just seems like a logistical disaster waiting to happen.
it is, and there's going to be inefficiencies, but you know what? It's such a damn good investment where the fundamentals really make sense that they're going to do it anyway. So people should take note on what the pros are doing and try to emulate it. And when you're doing it on your own smaller scale, or you do it with like a group like us, right? You're more nimble and just take a hint what the professionals do, not what the kids do buying GameStop or whatever.
No, no, definitely, definitely. Well, this has been an interesting conversation. Where can we find you online and how do we get in touch with you?
Yeah, they can check out simplepassivecashflow.com. And if you guys like podcasts, check out my podcast, Passive Real Estate Investing via Simple Passive Cashflow.
Excellent, excellent. Well, I can't think of anything else. Is there anything else you'd like to add before we go?
Um, no, just I think a lot of this is kind of comes down to the numbers. And, like early on when I was buying these rental properties, I was making like pretty high returns, double digits. And I was looking at my paltry 8 to 10% and my 401k stock market, and that thing went up and down like a roller coaster. And then I started to realize what a sham mainstream investing was. I mean, it's powered by all these large investment companies where most of your money goes to hidden fees. Forget about that expense ratio at 0.1%. That's BS. They're not including all the top of the line fees that are just stuffing into their operations. At the end of the day, you can find better returns outside the mainstream stuff. Unfortunately, you have to educate yourself and you have to meet other people because it's a people business. But if you're, somebody who is unwilling to do that, then yeah, you just sit on your computer and click and click and click and, get whatever you want on there. And that's what you're going to get.
No, definitely. Well, thank you for coming on the Cameron Journal podcast. I appreciate it.
Yeah, thanks for having me.
That's all for this episode of the Cameron Journal podcast. Thank you so much for listening. Visit us online at CameronJournal.com. We're on Facebook, Twitter, and Instagram. And I love to talk to my followers and listeners, so please feel free to get us on social media at Cameron Cowan on Twitter. And we'll see you next time on the Cameron Journal podcast.